Hey guys, today's Sunday, December the 17th of 2023, and I'm going to go over natural gas on the geometry side. I've seen a few comments this morning, and there was a few of you, but sometimes it's not about numbers. It's just about people that are hungry for, you know, learning, researching. So I'm going to show you some love. And at the end of this video, I'm going to show you a bonus on a Gann's technique. I don't cover those things on my videos when I post them because they're too deep for the regular folks. But for people, when I say Gannist, every time you hear me say Gannist, there's a circle of people that are hardcore students of Gann's theory, applying it to the markets. And these hardcore students that study Gann and his courses and his teaching and, devour his books and apply these techniques and just try to see what works, what doesn't work, and what needs more tweaking to kind of get an edge. The last part of the video is going to be, or maybe in the middle, I don't know where I'm going to put it. It's going to be something on natural gas that I'm going to show you. So without any further delay, let's get into it. So this is my Elliott wave. For the Elliott wave guys, I show them love too, because I like their theory also, even though I'm a Gannist. I like to see what others see, because I'm curious. My mind is always curious, and it's always trying to figure out the nuts and bolts of theories and philosophies. So this is the monthly, and this is the count I have for Elliott wave. So we got wave 3. Wave 4 was 395 all the way to 462. Looks like we never made it. We made it to 363. You can see we're pulling back. The only problem I have on the monthly is that wave 5 is negative $5. I don't know if that's going to play out. That's the problem on the monthly count on this software. So it looks like we're about to cross over with a MACD, but in regards to the Elliott wave, I don't know. Maybe this could be an A, B, C correction once it, adjusts. But since it's a monthly, it's going to take a while. But to have a wave 5 all the way down here, it doesn't make sense. I mean, it's possible. Crude oil went negative, and that was crazy, but I doubt it. So I just wanted to show you that. So this is the weekly. This makes a little more sense. Wave 5, 1, 2, 3. Somewhere around that April is a wave 3. And according to the software, we already hit our wave 4, which was that October 27, 31st high, 363. And now we're working on a wave 5. Another problem I have is, and this is not, it could happen. I'm just putting it out there because, you have to see everything in order to make, a good, decision. It's indicating that there's a possible wave 5 and it's minus $1.20. Is it going to get down there? I'm not going to say never. I could probably see maybe a fail new low, maybe a little capitulation. And I'm going to show you some targets, that's possible. But to go negative, and I'm not going to say never, it could happen, but, I'm not leaning towards that, but I'm just showing you, just in case if this does happen, because you just never know. I am going to buy with my eyes closed. I'm just going to see what the enter button is, and I'm just going to hit and buy if we ever get to negative, because that's a given. It's not going to stay negative. Nat gas can never stay negative, especially minus $1 for like consolidating in that range. That's like crazy. That's when all the hedge funds, institutions, algos, they probably have programs where anything that goes negative 0, they're buying. As long as if it's just pushing down, they're buying until the pressure and the wave turns, and then it just swings up. But anything, minus 0, you can't really think about that. There's no theory. You don't need Gann. You don't need anything. You just need to just buy. But that, I digress. That's just my opinion. I'm not going to tell you what to do. But anyway, Wave 5 down here, I don't know. But I'm just showing you there could be a possible wave somewhere around here or a fail new low, testing the 194 and then, trying to make higher prices. Let's look at the, you can see the Stokes are negative. Let's look at the daily. And the daily, we need to like go further back because there's a lot with Elliott wave. We need to close this down a little bit. Maybe we need to bring this down a little more too. So this is, here it says March. I'm leaning more April 14th, wave 5, but it's fine. Wave 5 here. You got a bunch of ABCs, ABCs, ABCs. ABC, the latest one is here, where you get a 1, 2, 3, 4, 5. And that was your October 31st, 363 high. And then you got a 1, 2, 3. And between this 3, you got a 1, 2, 3, 4, 5 wave. And now wave 4, it's indicating 251 projection target all the way to 264. So this is possible? Yeah, this is definitely possible. Because we are way oversold. Like way oversold. Look at this. Look at the Stokes. Remember the Stokes here? When I don't know if you guys been watching my video a lot, but the Stokes, when we get them very toppy, these black marks show up. It showed up here. And then it showed up right here. And look at this indicator, nailed it on the second one for a possible high. I mean, you see them here. It's not perfect. It showed up here and it kind of just chopped and pulled back, little pullback. But this one was massive. And now it's on the other side of the spectrum. Now it's on the lower side. So now it's telling you, yeah, you know what? We're way oversold. We're due for some kind of bounce. I mean, it can't just go down. Nothing goes down on a straight line. So you need a little back and forth. The bulls and the bears oscillating back and forth. So according to Elliott wave, we're supposed to be hitting a 4 here, and then your 5 finalizes this whole thing. And this is, I don't know, 44 cents. I don't know if that's going to get down there, but that's just projecting on the daily chart. I kind of see maybe a fail new low, or maybe a little lower than 194, maybe 150. But let's open this up a little more and kind of see other things here. Let's put our one of Gann's theory counting, calendar and date. As you can see, the linear regression channel is down. This is a target I have just in case we take out 194, which is right here. There's like a capitulation where they just slam it down anywhere between 175. The midpoint will be 167 and the bottom would be 159. This whole area from 175 to 159 could be a possible target for a wave 5 to end this and then bounce somewhere around here. That's the target I have if it goes past 194. You can see we hit a 180 count here and it kind of pulled back and then it went up and then we hit the 144 count. And that was what, November the 7th. So it kind of missed it on the top end, but we used our day count with the 195 low, which nailed it here. But you can see the 144 is here. We have 180 count here coming December the 27th, 270, which is January the 9th. Will I be watching? And then you have a 360 count here that is going to be on January the 23rd. So those are days that I'll be watching. Targets to the upside, if this is it, taking out that 363, if we take it out, targets to the upside will be anywhere between 383, 389, and the high point will be pretty much, you could say $4, 395. And I think that's it for the Elliott wave. Now we're going to go into the geometry and see what's cooking there. Okay, so this is a geometry chart that I use on natural gas, and you can see that I just keep expanding this Andrews pitchfork. You can see right here, we kind of kissed this angle and fail, broke through the 50%. We were just kind of hitting it here, went up, found support at the 25, extended over, hit this angle, failed at 50, found support at the 25, failed at 50 again, fail this angle, try to reclaim it, but fail, and then fail this angle, and then it just failed this other angle, and it just kept going, and it's already out of the box. So now it looks like it's trying to recoup. This is a Gartley pattern ABC CD that I use, and the last leg of support was 236. We kind of pierced it below it, and now got this nice little pop. I use this for timing, but so far it hasn't adjusted, so it's nothing of an edge right now. Just kind of using it as levels. The Gann speed, as you can see, I'm expanding it. I'm probably going to expand it now if this is a low, or in the future, once we get our real low, I'm going to expand this to cover this high and whatever low comes in the future. But as of right now, I just keep expanding it. And you can see that we broke this angle, almost kissed the one half of 228, or maybe we did. I think the low I saw was 223, so we even pierced that. Mind you, these are closes. This is not the actual, high, open, high, low, close. This is more close. So this kind of is giving me, it's kind of, eliminating the volatility. So all the wildness of the up and down is just giving me, okay, we did all this crazy move this whole day, and now this is where we close. So I recommend for traders to look at, regular candle, whatever, Hikanashi, whatever you use. And then also look at a chart of just close prices. What, because it's actually telling you the trend. And you can see every time we close, it was just making lower highs and lower lows. And right now, this move reminds me of this kind of move. A lot of buyers came in here. So from this high, but what looks exactly identical or very close is these two right here. So let's see if this would play out where it pulls back, go up, fail new high as of close. Not that, it probably went higher and then pulled back. But if you look at the close chart, it could tell you that, yeah, we did all this and all that, but where we closed was below this high. So it's going to tell you, it's going to give you a little clue that, maybe there's a possible turning here. And maybe we could go short. And you can see that this angle was right here. Lastly, this is a weekly chart, and I'm using Dewey cycles. I also follow his kind of stuff, but I'm not really too hardcore into the Dewey stuff. I just like to put it on the chart and just kind of see what it does on the chart and see what edges or what works, what doesn't work. And I put a 5-year, and the 5-year is not perfect. It missed this high here, came in early, pulled back, kind of got this low, but then it overextended. And the high was here, and it shot down. The low, was April 14th, and this went all the way to June. So it's not perfect, but it did get this high here. So it's a hit or miss. And this is the Dewey cycles here, and this is an average. The white line is an average of all these cycles right here, using a 5-year time frame. The purple and the white are the advanced swing chart, one against technique using these Gann swings indicators, and this is indicating that right now on the weekly there's no buy signal yet, so they're both down. And you can see that this Dewey cycle average bottoms out somewhere around February. Ooh, remember February? I got to do that because that way it kind of reminds you, it's like, oh yeah, February seasonalities. February, March, they're very, very weak. Maybe it's a good time to buy. Once you build that muscle memory that way, you start thinking that way. So when you see these months, they'll hit you. It's like, oh yeah, I remember he said February. February, Dewey cycle, totally different from the spectrum cycle analyzer that I was showing you in the other video. So totally two independent indicators somehow are seeing something in February. So yeah, you give it a little wiggle room, February, March, maybe January. We don't know exactly. I'm just telling you somewhere in this ballpark. But there's always a point where it just hits zero and it's February. So it could be maybe January, maybe it could be somewhere in February, and it could be also March, because we know March is also weak using the smaller time frames, which is the 5-year. And we also got a hot zone in May using the weekly and the daily cycle with some other cycle number. And in this yellow line, this is a mirror cycle. So this is a mirror of what happened in the past back. And you can see that right here, looking at what happened in the past in a mirror cycle, it showed you this maybe a possible turning point here. And that was November 17th. So it came a little late. So, you know, somewhere around November, you would have been like, okay, maybe there's a turning point. It's not going to probably hit it on the 17th, but it could. But we know that it came way earlier, the 27th, 31st. November 1st, it was already starting to go down. So that's that. And this is indicating right now on the week of the first week, maybe a turning point, maybe a spike up. I don't know. That could be weather related. Maybe it's freaking cold and it's snowing everywhere. Who knows? You know, it could be crazy in January. January's normally cold. So you never know. That could reflect that. But somehow it'll fizzle and it's showing somewhere around July. So this is different. We don't have any correlation with July showing as a low. Well, you know what? Yeah, I take that back. We know that April's strong, but then June, July get this little dump, or, you know, like a little weakness, summer, I guess. And then we know August and October are strong. And you know, August was that August 23rd high. So we know that August is normally strong within the smaller time frame on the seasonality chart. So yeah, that makes sense. Maybe June, July, we get a little bump. Is it going to be as high like $10? Maybe. Maybe it could be 6. Maybe it could be 5. Maybe it could be halfway. So from like 10, maybe 5 something. Just to be realistic. Maybe it could blow right through 20 and maybe go to like 15. You never know. But I'm just kind of just giving you a ballpark of what this indicator is kind of indicating. So there's like a lot of moving parts, a lot of things you just have to kind of like either write down or kind of keep revisiting so it could kind of sink in your head. So when you see these things, you kind of just go, oh yeah, February, March, February low, you know, yeah, June, July, yep, August is strong, October is strong. And so you start thinking like that, it's like second nature. Yep. November's weak, December's weak, you know, January's kind of flat on the weaker side, you know, February way weaker, March, and then, you know, could possibly get a pop in April. So maybe there's a potential there for, you know, probably a swing trade. If you start seeing it that way, when these things happen in the fast and right away, you're not second guessing. You already kind of have a game plan already in advance. You're already thinking this in December for next year. I think that's it. And now we're going to go to the good stuff, which is the scale chart, using the 45-degree scale chart and the geometry side of the analysis. Okay, so this is the geometry chart that I use. Let's see if we can get out of here for a second. There you go. And I just want to give you a tip. Gann recommended to get all the data you could get on an instrument you're trading. Go as far back, actually go to the beginning of when the instrument started trading. But then on top of that, you need to have like a battle plan. And I call it the battle plan, or your strategy, is because you want to focus in on what's happening now. And the only way to do that is by squaring the range, the actual range, not the all-time high and the all-time low, as low as, you know, you that's important and it's good to know. But then you want to kind of like, you know, like a general, you know, like the Ukrainian war or whatever, you know, the generals, this is where we at. We in Kiev and we're fighting here and the Russians are here in this mountain. How are we going to get, you know, this is the same thing. Think like that. And get the last high, which is that August 23rd high, 10:02. and get this low, that this low didn't take out that low. So now your prices are in between this high and this low. That's squaring the range. This is the range. This is where we at. This is real time. We haven't taken out that low, and sure, we haven't even gone up there yet. So once you determine that here, you get that last high, that last low, and that's squaring the range. This is the battle zone. This is where we're fighting. This is where we analyzing, dissecting, forecasting, price and time, looking at everything to see what are the probabilities of this going high, what are the probabilities this is taking this low, and maybe testing even this. That's this whole area right here. So the first thing you want to do is put a Gann fan, and you see that the Gann fan is 45 degree. We pierce this here, found support at this last leg, which I believe is the 1/8, and then hit this 1/4 right here and failed. So we pierced it. We went, you can see if I zoom in, we went and hit it, kind of pulled back, went all the way up. This is the close, so I'm kind of cheating. This is not the actual price, but even with the close, we closed or maybe up there and then pulled back. And now we're at the 1/8 level. Capitulation, pushed it back, and now we're up testing that. And this green line right here, this is the 200 SMA, meaning when you see the simple moving average that I have, I only have one. That means that price action is below all the moving averages, including the 200. So the 20, the 50, the 100, all that. And I just leave the 200 just to see if we can at least get above the 200. So this is the 1/8, and we cracked it. And now we're retesting it to see if we could hold and kind of stay above that. But you can see that this was very important right here. Let's get out of here. So this is the 1 by 1, 1 by 2, 1 by 3, 1 by 4 we fail, and the 1/8. Last line before we kiss 194, and if we take that out, we're going all the way down to like 147 to test that. Does that happen? Yeah, it could happen. I'm not gonna say no, but it's there. You should have it in the back of your mind that that's possible with the February and March or even May play. That could do that, and that could be your wave 5, and then things could start turning. So I'm just giving you scenarios, probability, not that that's going to play out, but just kind of, let's open our minds and see, what's possible now. We take the that high of 1002.45. This is the important one. We're far from this. This is the 1 by 2. 1 by 3, and we're kind of between the 1 by 2 and the 1 by 3. So there's not really much in here because it's all about angles. We haven't even kissed the 1 by 2 yet. And once we could get above or cross over 1 by 2, we got to deal with the 45, and we're way far from that. So that's not really important. Now, we take that February low, February the 22nd, do a Gann fan, and you can see that we were chucking along pretty well, and somewhere around here we failed. As you can see, you can look at the price action. We went up, came down, bounced again, and then cracked it and failed. So the reason why I have that one there is because I want to see, we got like a couple of lows here. I think the important one is the April 14 low, because I see a lot of clusters lining up, and you already seen by my videos that that low is very important in regards to time and price. But I always like to, explore and just kind of see, just because, like you just put, a Gann fan here, especially when you got a lot of lows here, a lot of spikes and a lot of, pivots, you don't know which is the one that's going to work. So you can see that we failed here, very weak. When we cross above the 1 by 1, this is the 45-degree angle. Once price action is above here, that's bullish, according to Gann's theory. So we are very weak right now. So I went ahead and put a Gann fan right here. So, and mind you, this is the 30, 45, and 60. I'm using only those angles, 30, 45, and 60, just to kind of keep the chart clean. And when you come in here, you see that we were chopping around here. We went up, pierced it, pulled back, chopped around, pierced it. This is where we would have been like, okay, if nat gas is going to really get to Momo, it's here that it's going to do it, and just chuck along, find support here, and keep going until it kisses this line. That never happened. This was the only glimpse of happiness where you could get a drink and, cheers, my friend. Cheers, mate. And a little shot glass of tequila, whatever your whiskey, whatever you drink, wine or just Coke or whatever, soda, water, sweet tea, anything. Just to be happy is because you were above this line. Once we fell below this line, darkness fell upon the earth. And we hit this here, which is the 60 degree. It looks like there was like a little battle. No, we got to hold this. No, like you see, we're all holding, hold. Why, when price action gets here, it's just like a freaking battle just to stay above the line? Why? Because of the geometry of it, especially you have a scale chart. And we failed right here, and it pulled back. All right, next chart. I mean, not next chart, next indicator. Squaring the range, one against technique. Take the low, take that high, and plots out angles and support. And you can see that right now we're at there's a support, which could be either support resistance. I don't know where it is right now, but that price level is 249. If we could stay above 249, we could be in this box right here in this grid. But there's a vector coming in on January the 31st, which you have to keep an eye on. As you can see, like here, vector example. Let's see if we can zoom in so we could kind of see what's cooking here. Actually, let's put this over here and let's zoom in. Perfect example of a vector where things just skyrocket. Volatility increases. I don't know what the direction is. It's unknown. Whatever happens here, it could either go exploding to the upside or crashing down. Does it happen all the time? No. But what does it happen? You got to be vigilant and ready with your fingers, on the trigger. We hit it right here. It exploded. Everything kind of lined up right here. We kissed this area. It looks like that would have been, I don't know. It's hard to guess because these are closes, but let's just speculate 363. And pulled back and broke this level, whatever I said, 249, and now we're kind of hovering around there. How did this level show up here? Because we are squaring the range. This is the battle zone. These are, who's squaring the range? Who you see on CNBC telling you this? Do you see Jim Cramer talking about these levels and this kind of technique? No, because the masses, they don't want the masses to know this kind of stuff. But here you're learning from me. Some esoteric, points of view and looking at the market different from, your peers. And like I said, does it work all the time? No, but when it works, it works. And now you're squaring the range from this high to this low. Now you're dissecting, you're getting even closer to what's really cooking. And right here, there was a vector point at 1208, December the 8th. And it looks like it crashed right below it, or right past it, and it's finding support. Well, kind of like a turning point. It's just a little late. Like I said, sometimes it's perfect, sometimes it's not. Sometimes you see it where it does the turning point right there, but as of right now, don't worry about this line. This is just because of my crosshair. But you can see that right here, it just fell right below it, and now it's here. So now we're in between these two, this box or this grid of price action. And there's a date you want to watch, a vector coming in on March the 12th. Remember, February, March, lows, weakness. turning point. This could be possible. That's why you always, that's why you have a lot of dates and a lot of things you're looking at, because you don't know which one is the one that's going to work out. Only Gann probably knew that because he was very good at what he did. I'm not Gann. I'm just learning from him. The ellipse. The ellipse is a technique. You take the current low, you get that high, and look at the end of the ellipse, and it's showing something about July 17 of 2024. Remember, August, always strong. There could be a possibility that there could be some kind of energy or fluctuation or change in trend here that could lead to that August, impulse higher. But that's just me speculating, but that's how my mind works and how I see these things. Once I know seasonality and everything, the geometry is kind of leading you to this. Is it going to happen? We don't know. But, June, July, especially July, from this range to here is telling you, watch out. And we already know August is strong using a 5-year seasonality chart. We also take the high on the scale chart and get this low, and you see that this is very, very important. We cracked this ellipse, and now we're trying to gasp for air and get back in this circle of the sun. And you can see it on closed prices that we're trying to dig in to ride the sun higher. As long as we stay out of here and below this, we're in trouble. We're in trouble in so many ways because you're below the 45-degree. And the longer we stay below this anchored point of the ellipse, the greater the chances are that we could test 194. Advance in support resistance. This is now that we know that this, we got, an established high. This is 252, another level that we cracked, and now we're trying to regain again. So key levels would be 304. And if we blow through 363, you can mark that down. You could probably test 410. And this could probably be like a April high, maybe an August high. We don't know yet, but just levels that you just want to, once we take out 363, things you want to start, have actual targets. This was from this swing high to this swing low. We never made it to a 378. We went as high as 363. And that's because price and time, when you catch up, it's going to turn. And that's what happened. Fibonacci ellipse. Want to keep an eye on March the 14th. Remember March? February, March? This is the major scale that I'm using from this low to this high. Keep an eye on March. Also, look at what happened in the past. This is a minor scale from this low to this high on a scale chart. And you can see that it was indicating something cooking around November the 12th. So it was a little late compared to the October 31st, 31st high. So it was off. It's not perfect. But there was something coming. And it came, and if you really zoom in, you can see that right here, going straight up, it was probably that peak right there, a retest. And maybe you could have looked at it both ways. You could have seen it as like, yeah, you know what, maybe this is going to bounce right here and really explode higher and do one leg higher. But it ended up turning due to the fact that price and time met right here. So it was indicating that this was going to end. Lastly, pitchfork. Always good to use your good old Andrews. And you can see that this Andrew was telling you, we're good. Whoa, we're kind of below the angle, but now we're really good. On support bounce, we're really good. And here, this is where we failed. And we're way off this angle. Very important angle. Now you could probably adjust it at 50%. So the angle might come out here. I haven't done that yet, but I'll probably do it in the future. But that's something you want to keep an eye on. So this angle was very important, and we failed it right here, the last leg, and then it cracked. So that's it. So I think my last clip would be the Gannish clip. This is for the hardcore Gann students. My last clip. So if you're not into that stuff, you could probably end it here. But if you really like this kind of stuff, this is the kind of stuff that Gann researched and didn't really talk about it in his books. But the more you research and look at his courses and everything, you could tell that he was using some kind of technique of this. So let's go to that clip. Okay, so this is what Gann was using when he was trading. He was a researcher, and he was looking for the cause and effect of things that affect the instrument he's looking at. So this chart right here is showing April the 14th, low of 194. As you can see, this is the sun, and it was in Aries, 24 degrees. And you got Jupiter here, you got Mercury, you got Venus, you got Mars, you got Saturn, and the moon right here. Let me do that, yeah. You kind of see my indicator. And we made a low of 194. So that's an important time stamp in the chart, and also an important time stamp of what happened that day in the sky. So you go ahead, and I'm going to jump straight to October the 20th. As you can see that the sun has made it all the way to this side. So from a snapshot of what's happening in the heavens on that day, that natural gas made a low of 194. All these planets, they all move around. They're not still, as you already know. So we went and jumped ahead onto October the 20th and see what was happening towards the October 29th, 31st. So if you take that sun, which is, obviously, and you count 194 days, that will lead you somewhere around here. As you can see in degrees, 194. But you don't need this. You can just count 194 days from August 14. It takes you here. So that's not hard. You've already seen me showing that on the charts. Now, if we start going day by day as we approach October the 27th, you can see this is the sun and Mercury together. So the important planets here are the sun, Mercury, and Mars. And I also anchored my Gann emblem here at July the 29th. So these points right here are resistance point, or things just get a little harder right here. And these are positive. The 120, 2/3, 1/3. The 1/4 was somewhere around here, anchoring it from July the 29th. And you want to keep an eye on the sun. You want to keep an eye on Mercury and Mars as we get close to October 27, 28, 29, 30, 31. So keep an eye on that. I'm going to just click on each day. As you can see, Mercury went ahead past the sun. Mercury's still ticking. Keeps traveling. Mars just crossed over this sensitive point right here. We're already at the 25th. You can see Mercury is right behind Mars. 26. Mars is very close. Mercury is very close to the sensitive point. Right here, it looks like it's about to pass it. That's the 26. And that 27 was that spike. You can see that now Mars is opposite Jupiter. So Mars is getting some strength, and Mercury is right behind it. And then from the 27th, things get interesting. 28, Mars is getting right close, and now it's in conjunct or opposite Jupiter. This Jupiter was stationary because this is a snapshot of what happened on April 14th. So these two planets are getting juiced up, getting power from Jupiter. On the 29th, Mercury and Mars become one. They're, conjunct, as they say. They're one, and look at the sun. He's right about to approach this close to 194 days. So things start getting very, I think we already had that spike. We're already up there kissing 363. The 31st, you can see that Mercury passed Mars. And I think we either kissed it or right here. 30th. Actually, this is the 30th. And you can see now on the 31st, the sun just passed that hot zone right there of 194 days. Right there in degrees. So the trigger was the conjunction between Mercury and Mars and the sun crossing over this hot point in conjunction with price of 194 days that relate to the sun from over here. 194 is here. What was the high? 363. High. Low. Do an angle going down here. And you see 363. Maybe it was 364. Let's see if my hand is right and I'm trailing this down. Yeah, 364. So it never got to kiss 364. It could have, but it didn't. It was 363, and then it pulled back from 194. So you got the square of 9 confirming that's going to be your price. You got the sun indicating it on 194 days. You got July the 29th anchor point that the 1/4 square was going to be resistance somewhere around October 29th. And the trigger was Mercury with Mars and the sun. All of this all lining up. I'll leave it at that. For you Gannists out there that are into this kind of stuff, this is the evidence that I've come across in regards to his theory and his technique that applied to this high that we made on natural gas. So if you got any questions or comments, you can leave them down there. But I leave it there because this is pretty deep. And for some people, this is kind of weird. It doesn't make sense. How can this even relate to the markets? This is crazy. But this is the kind of stuff they won't talk about CNBC because they want you to see this kind of stuff and think that it is crazy. But if you look into Gann's life, this is where he was at in the 1900s. This is where he was at mentally. And they say he was one of the greatest traders of all time. So I leave it up to you. You decide what you think. If this is crazy, this is BS. Yeah, I like your stuff, but I don't like this kind of stuff. This is weird. This is woo-woo stuff. All right, that's fine. That's why I don't even show this kind of stuff a lot, because I might lose subscribers. I'm probably going to lose a whole bunch of you already because you think I'm crazy. You can think whatever you want. I've seen this many of times, and I don't need any convincing that this thing doesn't work. But I'm just showing you this just to you could kind of get an idea of what Gann theory is, and it's very in depth. It's just not indicators and the simple moving average and the golden cross. No, this stuff is way past all that stuff. But I digress. You guys have a good Sunday with your family, your friends, your loved ones. And I'll keep you posted on my thoughts on natural gas.